right before your eyes. South Florida is shifting, the tides start to turn. If you don't know the math, you're gonna get burned. Yeah, this is the Miami Condo Exchange. Welcome to the Miami Condo Exchange, where we break down the price, the scope and the range. With Peter Zalewski, keeping it real, digging deep in the dirt of every single deal. From the buy-side pressure to the sell-side heat, the only podcast you need on the Miami street. Hey. Real numbers, real talk. The hyperbole stops here. This is the Miami Condo Exchange, y'all.
Happy Tuesday, Miami. This is the Miami Condo Exchange. A statistical look at what's going on in the South Florida condo market. Miami-Dade, Broward, Palm Beach County. This week, we're going to be talking about and recognizing the 5-year anniversary of that disaster that happened over on the barrier island of Miami-Dade County up in the town of Surfside, over on 87 Terrace, right there on the border to the south of Miami Beach and the southern end of Surfside. Everything changed in the Florida condo market, South Florida condo market, the Florida condo market, as well as the national condo market. That fateful day at about 1:22 in the morning, a 12-story building with about 136 units, it tumbled. It fell. Nearly 100 people died. Ultimately, it was a $1 billion settlement paid out to the families of the victims. And legislation came down the pike. Lobbying by the insurance companies changed everything, not only in South Florida, not only in the state of Florida, but I would argue in the nation. A lot of the other states in the nation are starting to look at Florida and have been looking at Florida as to what we do down here, and they're implementing their own policies nationwide. Doesn't matter if it's Hawaii, it's Connecticut, and New Jersey. All these states are starting to embrace it. You know who else is embracing it too? Fannie Mae, the secondary market for mortgages. They have announced come August, they are eliminating limited reviews of condo mortgage applications. What that means is, come August, now condo mortgage applications are going to have to go through a full review, which means it's going to take longer, it's going to cost more, and you're probably going to get a lot more rejections. And when full reviews go on of these condo mortgage applications, what's going to happen? They're probably going to be able to pinpoint exactly what is the state of a condo building. I'm here to tell you that when you look at condos now, 5 years after Surfside, it's not about location. It is now about the age of the building, the age of the building, the age of the building. Based on the age of the building, all kinds of things come out of it. Why? State of Florida now, every 10 years, you have to do an inspection. It's mandatory. That inspection is called the Structural Integrity Reserve Study, or SIRS. At year 30, big 3-0, all of a sudden you got to do a milestone inspection, which tends to be very in-depth, detailed, and always leads to a special assessment. How much are these special assessments coming in at? Well, we're ballparking it at $25,000 if that building is up to 4 stories. If the building is 5 to 14 stories, call it $65,000. And if the building is 15 stories or more, that's going to be $100,000. And because of that, we now have a brand new category that we created in the marketplace called a vintage condo. Vintage condo is any condo that's at least 30 years old or older, the ones that have gone through the milestone inspection. So we are separating the market. We're bifurcating the market into the modern units, which are going to be basically 1 to 29 years old. Once they hit 30, they then enter into the vintage category. So what we're going to do today for this particular podcast, remember, we're talking about statistics, we're talking about trends, talking about all that. We're going to take a look at what's going on in our South Florida condo cliff indices. We got 2 indexes we've set up. One is for the overall market. The other one's for the vintage market, 30 years old or older as a result of Surfside. We're going to tell you what's going on in South Florida, both on the overall as well as the vintage. We'll then get into Miami-Dade County, overall, vintage. We'll then get into Broward County, overall, vintage. And finally, Palm Beach County, overall, and vintage. We're going to get all that. We're going to tell you what's going on. We are checking the market on a week over week basis. Been doing it since January 1st, 2025. call it the South Florida Condo Cliff Index. That's short for the South Florida Condo Association Financial Cliff Index, launched on January 1st of 2025 in anticipation of where we are today. And where are we today? We're standing at the precipice, the edge of what is this cliff. Cliff's a situation where basically you're doing everything you need to do in your condo, but the people around you are going bad. They're either choosing not to pay or they cannot afford to pay. Therefore, they're forced into foreclosure, or maybe they're forced to sell. As their units start to trade, it then becomes much like the game of Tetris. It takes 4 deals in a building, according to a commercial real estate appraiser, to reset all of the pricing. The market was going up in 2021, 2022, 2023. It was great times back then. Prices kept going and going and going and going and going. Now, as it's starting to unravel, as it's starting to unwind, this is becoming a bigger and bigger point. And as a result of that, as well as the cost of condo living, because of rising maintenance fees, hefty special assessments, and insurance premium, you have sellers heading for the exits. And as they head for the exits, that's ultimately pulling down pricing. So what we did is we created this index, January 1st, 2025. We've been tracking it week over week over week. We're trying to give you a real-time perspective of what's going on in the marketplace. Many of you rely on closed sales data. Problem with closed sales data is it is closed. It's old. It doesn't reflect where we are today. It reflects where we were in the past, much like on Wall Street. Unemployment numbers will tell you, where were we? How do you know where we're going? Well, you look at the indices. You look at the Dow Jones. You look at the NASDAQ. You look at the S&P 500. You look at the Russell. You look at whatever indice you want to track or index you want to track. And that's what we've tried to do with this index. And we're going to get into it today as we are on the eve of that 5-year anniversary of that tragedy where basically the building just fell on all of these poor people. 98 people died. Horrible, horrible, horrible situation. 5 years later, there's been some results. There's been some, explanations as to what happened. They're claiming it was a poor design. They're also claiming it was a lack of upkeep. Condo Association made a decision not necessarily to do all the necessary work. They kept kicking the can. As of 2026, under new legislation, you can't kick the can anymore. If issues are identified as part of these mandatory inspections every 10 years, structural integrity reserve study, or 30 years, milestone inspection, it now has to be funded. It has to be funded through special assessments or associations taking out loans. Typically, it's private lenders. Interest rate is going to be 9, 10, 11% to get financing to do the necessary work. And then, oh, by the way, if you're going to go ahead and try to get do the work today, you know what you're running up against here? The lingering effects of Liberation Day. Remember that April 2nd announcement about how tariffs were going up and it was going to be great for the country? Well, inflation's north of 4% right now. Why? Part of it has to do with the Iran war and fuel costs. So, very difficult time right now for people living in a condo. The cost of condo living is excessive. It's become unaffordable. And what happens? A lot of buyers are saying, let me just rent. It is cheaper to rent than it is to own. And many owners who are trying to rent out their units, they are subsidizing the tenants. So we have a very, what do you want to call it? Let's sort of look at the condo market as if it's the mouth of the Miami River entering into Biscayne Bay. It's all brackish right now. There's no visibility, and that's kind of where we stand right now today. So what happens in a situation like that? A lot of people sit on the sidelines. Other people who are willing to go in when nobody else does, they're willing to negotiate and trying to negotiate to get the best deal, and that's what we're seeing signs of. So that's what we're discussing today. I'm Peter Zalewski, condo consultant, expert witness, founder of the Miami Condo Investment Club. I go live every weekday at 4 o'clock. We're always talking condos. On Mondays, I do Miami Condo Mondays with my partner, my co-host, Jenny Huertas from CVR Realty. Check out her website, cvrrealty.com. Tuesdays, which is what we got today, we have the Miami Condo Exchange. Miami Condo Exchange is a perspective, a view I have that when I look at the condo market in South Florida, it reminds me of where we used to be in the stock market, in the commodity market, and things like that. And what that is basically a large trading pit or a floor. When you're east of Interstate 95 in South Florida, especially east of Interstate 95, these aren't real people. These are speculators. This is not a family of 4 and a dog trying to live the American dream. These are speculators. They're trying to get in low and they're trying to sell high. Inevitably, they do it the opposite. They buy high and they sell low, as many people who bought in 2021, 2022, 2023 during the pandemic, when you could work from home. Florida Governor Ron DeSantis said, you don't need to wear a mask. And Miami Beach said, come on down. And you're permitted to get on a police car and twerk to your heart's desire on Ocean Drive. Those people are on the wrong side of trade right now as prices to really starting to pull back, and many of them got called back to the office. They're not living down here in South Florida anymore. They went back to Wall Street. They went out to Silicon Valley to work on AI. Now they're trying to rent it, and they can't unload it. And as a result of that, what do we got going on? We got rising supply. Months of supply is in a buyer's market, moving into a deteriorating buyer's market. What's a deteriorating buyer's market? About 13 months of supply. What's equilibrium? About 6 months of supply. Less than 6 months, seller's market. More than 6 months, say 7 months and higher, that is a buyer's market. We asked the real estate industry to come out with some sort of standards to spell it all out, because you know what they're doing? They're moving the goalposts. They're saying everybody's always known that 6 months of supply represents equilibrium. Now the industry said, well, maybe it's 6 to 9 months. So what we did is we asked them to come out with something. They didn't. So we went ahead and we produced what's called the Miami Condo Supply Tracker. We break it all out. That's why I'm here to tell you that we are moving into, if not already, depending on which category and which market you're looking at, we're looking at a deteriorating buyer's market, which is advantage buyer, which means if you are a buyer and you're out there looking for a condo right now, my best advice to you is lowball, lowball, lowball. And if you're a seller, it's not looking very good for you right now. Why? Because we got mortgage rates 6.5%. Wall Street says mortgage rates need to begin with a 4 handle. Yep, you got it. 4. Where are we at today? We're at 6. And you know where we're going? We're headed towards a big 7. What happens? When interest rates go up, housing goes down. When interest rates go down, housing goes up. That's what we're up against right now in this marketplace. So if you were a seller, you got some real tough times ahead. Why? Because cost of condo living. Got those maintenance fees. You got those hefty special assessments. You got the insurance premium. And as a result, buyers, they're sitting on the couch. They got no reason to hustle in. Get 6.5% mortgage. There's no reason to rush. There's no urgency. But if you're a seller, you're feeling the tick-tock, tick-tock, tick-tock. And I'm not talking about the Chinese app. I'm talking about the clock ticking and those payments being due every month at the same time that the work begins on a lot of these buildings. 5 years ago, Surfside went down. Why did it go down? Well, some of the rationale was they didn't do necessary work. State of Florida is not going to allow that. Insurance companies who are backstopping all these buildings, they are not going to allow that. So now the work has to get done. And because the work has to get done, that means every individual unit owner has got to come up with the money. They know and identify with the state of some of these buildings. Well, until they open the walls. Once you open the walls and begin construction, you never know what the heck you're going to find. But at this point, they seem to have a good idea what's going on. The problem is, how do you come up with the cash to actually fix the building? That is the issue, especially when you go to the gas station. You're paying $4 a gallon. They're saying it's coming down, but then Iran's announcing they're closing the Straits of Hormuz. Good luck with that. We'll see how that all plays out. But basically, you got an affordability crisis going on in the United States. You got a condo crisis going on in Florida because the cost of condo living has gone up. And condos have, which were at one point a luxury to get people out of a single-family house, condos used to offer a spa, a marina, a restaurant, shuffleboard, all that type of stuff. Condos now become utilities. This is the easiest and probably the most likely way to get into ownership at this point in the market. And as a result of that, everybody's going into it. At least they were going into it, and now they're all trying to flee from it because they're getting eaten alive financially by what the cost of these condos are. And at the same time, during those 0% interest rate days when all of the real estate investment trusts were borrowing money, raising money, going out and building all these rental towers, those rental towers were able to undercut individual condo owners who might be trying to rent. And as a result of that, you got a big discrepancy, a big disparity between what does it cost to own a condo, monthly fees, versus what does it cost to rent a condo. So my advice to a lot of people is if you are in the game, what you do, you go and you buy efficient condos. Efficient meaning no amenities. If you see a swimming pool, you don't want that. You want a lower bill. You don't want that 70-story building. Why? Because it costs more just to keep, the thing about getting the water up from below street level all the way up to 7 stories, it's going to cost a lot. It's going to take a lot of equipment, and that equipment breaks down. As a result of that, it's going to simply be more for your maintenance fees. If you're in a lower building, call it 15 stories or less, probably got a better shot. Probably going to be much more reasonable. If you have a building with no amenities, you don't need that cigar room. You don't need that Pilates room. You don't need any of that. You know what that's going to do? It's going to bring down your maintenance. Maintenance in Miami-Dade County, mid to high rise, according to First Service Residential. Mid to high rise, according to First Service Residential. Big property manager counts. Go up to Broward and Palm Beach County, $1.02 a square month per square foot monthly. You take away the amenities, those maintenance fees are going to come down. Not going to come down all the way, but they are going to come down. And that's ultimately what you need to do if you're a buyer in this marketplace. Look for something that's much more reasonable, efficient. You don't want wasted space. You're paying price per square foot. Doesn't matter if it is on the property taxes. Doesn't matter if it is on the maintenance fees. It doesn't matter at all. Buy something that makes sense. It's tight. It's efficient. It doesn't have a lot of amenities. And chances are you're probably going to be in the money. The way you know if you're in the money, real easy way to do it. It's called the 1% rule of real estate investing. 1 month of rent represents 1% of value. $1,000 a month rent means $100,000 of value. $10,000 a month rent means $1 million of value. That's the way you do it. Go out, start kicking the tires, figure out what the thing can rent for. Whatever the monthly rent is, that represents 1% of the value. That is your price. That is the point where you need to go and do additional due diligence. And if something's completely out of whack, give it a pass. Those are the people who are likely languishing. They're dying on the vine like a piece of fruit. And that's the way you sort of play the market. Now, if you're on the sell side, you need to really kind of dig in and try to hope and pray that something turns around, because otherwise what you're looking at basically is probably a wasted summer. We're in the midst of the World Cup right now. Everybody's talking about the Scottish Tartan Army. And what they're doing is they're going around and they're partying and they're enjoying the football or the soccer. Nobody's talking about condos. Developers are talking about, oh, people are coming to town. They're going to look for condos. Sellers like, oh, this is our opportunity. Nobody's looking at condos. They're watching the football. They're partying. They're taking in the culture. And they're going to that place, Buc-ee's in Texas or something, some kind of mega gas station. They're doing all that. They're not looking at condos. And as a result of that, once this tournament finally winds down, it's probably it. You get into August, you know what you got in August. Remember, the tournament, I don't think the championship is until like mid-June. You get into August, first half of August, people are taking their kids on vacation. Why? Because school's going back at the back end of August. August is probably dead. Plus, you got the Fannie Mae. They're eliminating the limited review. It's going to become much more difficult to get a condo loan. So that will add to it. Then we get into September. Typically, stuff starts to pick up in September. And you know what's happening this September? Probably nothing. Marketing campaigns are going to be really kind of hitting their stride for the election coming up in November. We're going to have a very contentious election. Who wants to buy into a market where you don't know which way Washington's going? You don't know which way Congress is going. We all know what happens during a presidential election. A lot of people sit on the sidelines. That's probably what you're looking at this particular September and October. So what I'm here to tell you is a seller, you're probably not going to have a shot at selling for any kind of price you want until we're talking about turkey, stuffing, and cranberry in and around Thanksgiving and when the winter buying season begins, which goes from November through April. Right now we're in the summer buying season. This is a time of heat, humidity, hurricane warnings. Only people in town basically are locals and those looking for a deal. Otherwise, people aren't here. Getting the winter time, now you got your casual buyer coming down for a vacation, an event, a cruise. Fall in love with it. They get the bug. Next thing you know, they want to buy a condo. That's just the way the game kind of works. And that's where you're up against if you are a seller. So you need to dig in and figure out a way to get through it. If you're a buyer, you need to get off the couch and start lowballing. Now, where should you lowball? And I'm going to tell you right now. Why? Because we got our indices. I should tell you, like as mentioned, 5 days a week, I do a podcast. I mentioned today is Tuesday, so we do Miami Condo Exchange. Wednesday, I do the Peter Zalewski Show. It's a one-on-one conversation with somebody I think you need to know, or I do deep dive into a subject. Thursday, we talk distress condos with the Condo Capitalism podcast. Fridays, I wrap it up with a bull versus bear discussion with somebody called Daniel Hernandez over at Compass Real Estate, and that is Fridays at 4 o'clock. So at this point, we're going to go ahead. We're going to share some screens. We're going to tell you where you need to look, but we're also going to remind you that you're watching it live, and as a result, you get to see it all for free. If you're going to want to watch it on demand, and once this podcast is over, go ahead and do some edits. We'll focus on the sound, and we'll focus on a look, a template. We're going to apply a template to it so it looks the way it looks. Then we're going to publish it. You'll be able to watch it on demand. Thing is, though, if you're going to watch it on demand, you got to be a member of the Miami Condo Investing Club. It is a community we're building for those people who are interested in condos. Those people who want information, they don't want the sugar coating. They're not looking for the sell side hyperbole about 1,000 people a day moving to Florida, gateway to Latin America, the trees growing to the moon. No. If you want straightforward information, somebody's been on the ground since 1993. I was a journalist for 13 years. Set up a buy-side brokerage company called Condo Vultures. Same time I was writing a column for the Miami Herald, as well as, in addition, Miami Real Deal. Did for 5 years for both of them. So been looking at the market, been studying the market, and been talking straight about the market. If you're looking for that type of information, consider joining the club, miamicondo.club. Our summer initiative, for what it's worth, is we are finally going to be launching, come November, right in time for the winter buying season, our condo ratings agency. We're going to be able to identify condos based on economic feasibility, stability, viability. And that's what it's all about. We'll be able to tell you building after building, association after association, how do they match up to their peer group, and give you an idea. Is this building making any sense, or is this building, should you give it a miss? And that's what it's all about. But that'll be member of the Miami Condo Investor Club. You guys will get access to that. But where am I going with all this? Well, we're going to share our screens right now, and you're watching it live, so you get it for free. Otherwise, on demand, you got to be a member from this point forward. So let me go ahead and pull up my screen, and we'll start off with some line charts. We're going to go with line charts. We're going to look at the indices first. Then we'll follow up with pricing, and then we'll give you the hard data. Basically, before I pull it up, let me sort of set the theme. What's going on? What you got going on is you suddenly have a bump up in the indices. Why do you have that? Well, the indices work as you got active listings, you got pending sales. They should move in opposite directions. If pending sales go up and active listings go down, it's going to be a stronger market, which means advantage seller. Also means buyers, you probably want to hit that market is hard. Now, if it goes the opposite way, if you're going to have listings going up and pending sales going down, that is advantage buyer. And that means the index will go down. That's the easy way to pay attention to it. And again, week over week over week, so we're able to track it, just like the indices on Wall Street. They track it, they tell you what's going on. Based on that, now you know, hey, maybe this market I will look at, or no, let's give it a miss. It's not making any sense. For instance, we updated the main numbers. You know what we found? Fisher Island, that island that's supposedly the most expensive zip code in the United States. You know what? Nothing is happening there. Nothing. A lot of people bought. Now they're trying to get out. They can't get out. Maybe you got some luxury product going on, and you know it's exclusive, or it's super luxury, or ultra. Nothing's going on there. Nothing on the resale market. Pre-construction, who's to say? Listening to one of these pre-construction people is like, you don't put a lot of confidence. At least I don't. I've been around a little bit too long to follow the shiny object. But let's go ahead. We're going to pull up the line charts for the indices. We'll give you guys an idea which market's strong, which market's not. We'll also show you why the index is going up, or the indices are going up. We'll also point out how the prices are holding firm, and in many cases pulling back on a week over week basis. So let's go ahead. We'll pull it up. I'm doing it right now.